Hello, everyone. Happy Tuesday. First trading day of the week. Hope you enjoyed your 3-day weekend. We got lots to talk about today. Lots has happened in this here stock market. If you haven't seen already today, we are down 2.25% right now on the Nasdaq. About barely, basically 2% on the S&P 500. And it is clear now things have changed. We have to talk about the downside. We haven't talked about the downside in quite some time, but unfortunately, I am not going to ignore price action. When price action becomes bearish, I become bearish. Data and price action now supporting the downside right now. And we're going to get into all of that. We're going to talk all of those things. So first things first, let's look at the 10-year bond yields. Bond yields just going crazy. Absolutely shooting to the upside. Bond market is selling off. It has been selling off basically since the start of this month. And I said that in my previous video on this channel. I talked about how stocks and bonds are just playing a game of chicken. While the bond market has been selling off all of February, the stock market was just chopping around. I mean, it sold off a little bit, but it's just been chopping. It's playing a game of chicken with the bond market. And unfortunately, the bond market, they're the big dogs. They always win that game of chicken. They aren't emotional little children like the people in the stock market are. Everything gets scary in the stock market and everyone sells, but the bond market, they are, when they make moves, it is like serious. They're not messing around. They don't play around. And now we're seeing this selling off in the bond market, and the stock market is now following it. If you want a good previous example of this happening, we can look back here at August. Look at August. Start of August, US 10-year, we bottom here. It starts to sell off. And when I say sell off, I mean the yields go up. So yields start to go up beginning of August, which is arguably pretty bearish. If you look at what the stock market was doing in August, beginning of August, we look at the 1st of August here, S&P is at 4,100. We go to 4,300. Halfway through August is when we top up here at 4,300 on the S&P 500. And the US 10-year has just been going petering up. And then what happens? It really starts going. And then that's when the stock market. So it's a good example of that delayed reaction. So the bond market sees it happening first, and then the stock market finally gets there because stock market's just dumb compared to the bond market. So that's exactly what's happening here. We have this perfect bull flag on the US 10-year. We're breaking out of it. We have broken this previous high back here at 3.9% back in December. We were heading back for 4%. And now that is where the market basically bottomed, when we were back over here at 4.2%. If you look at the 2-year bonds, we are almost at our highs, almost at 5%. 4.8 is where this peaked back in November. We're heading back for that at the 2-year. Same thing, bull flag. We broke out of it, started this month, but the stock market just ignored it. We were just going up. Bonds are selling off. Stock market wasn't selling off. It was like, hey, we think things are good. Then what happens? We get CPI news, and then it sells off. Yeah, we know what happens. So why do we think this is happening? Well, if we look at our nifty little FedWatch tool, I think I talked about this in my last video, but now the market is beginning to not think that they're going to get a 50 basis point hike, but starting to consider the possibility of that happening. Back over here at the end of January, you can see that was a 0% chance. They thought there was no way we were getting that 50 basis point hike. The stock market was fully convinced that the Fed has begun to slow down, that we are going to only see a couple more 25 basis point hikes right from here. I mean, at the start of this year, the stock market was basically convinced that we were going to get a 25 basis point in January, and then another 25 in March, and then we were going to get that nice pause, baby. We're going to see a pause. We're going to just wait and see what inflation does. But now, as you can tell, looking down here at the bottom of the screen, you see this. We go from 0% chance of that 50 basis point hike to 9.2% back in February 14th. And now, just 3 days after that, that chance doubles after we get that terrible CPI and PPI news. That chance doubles from 9.2 to 18.1. And now, just today, just over this weekend, we are at 24%. So this chance of a 25 basis point hike just keeps creeping up. And the market is scared shitless of that. And why would the market be scared of that? Well, because it just completely destroys that thesis that the Fed is finally slowing down, that they are seeing enough of a drop in inflation to begin to think about pausing. That if they were to go from 25 last month to 50 next month, that would just completely destroy that. We would be back to 50 basis point hikes, and we would be back to wondering how high is the Fed going to go. We don't want to wonder that. We want to be convinced that we know the Fed is just going to stop at 5%. But if they come out and drop 50, that opens the door for 6%. And if then we get to 6% and inflation's not doing anything, then what? Then what, dude? What's going to happen then? I mean, are we going to go to 7? We haven't seen unemployment moving. We haven't seen inflation coming down. We saw it coming down for 3 months. But just this month, just January, we had 0.5% over the month of January CPI read, which was the highest in like 5 months. PPI was just abysmal, just horrendous, the highest we've seen on that in like 6 months. So now we have PCE coming out on Friday morning, and I expect that's going to be about as high as it's been in the last 6 months as well. So that has completely destroyed the thesis that inflation is going down, that the Fed is going to start loosening, that they're thinking about pausing, that maybe by the end of this year we'll begin to start cutting rates. That has kind of just completely derailed that entire train. And this is why you see the reaction in the market. This is why you see this sell-off. And now if you look at the price action of these past 3 days, trading sessions, it's been horrendous. I mean, PPI day was just a bizarro day. I mean, we gapped down, we filled the gap, we chopped sideways for 4 hours, and then the last hour of the day, just rug pull. Then Friday, we gapped down, we head towards the gap, we didn't even get to the gap. And then today, we gapped down and just nothing. So these past 3 price action days, days of price action, has just been screaming short, short, short. Bears are in control. The trend is flipped. So what do? We accept it. We say, yeah, hey, I was bullish, but new data has come out and I'm ready to flip my mind. That's what traders have to do. You cannot be married to an idea. You cannot be married to the idea that, hey, 2022 was just, that was a bad year, but we sorted out all that inflation, because now that is just false. So now that this new data has come out, this price action supports it. The trend is clearly flipped to the downside. And now the market is just like, it's scared to death of a 25 basis point hike, because that would be bad. So let's see what the PCE read says on Friday. I imagine it's going to be bad, because that's what always happens when CPI and PPI are both bad. PCE always comes out bad. And now what's the Fed going to say? So last month at FOMC, the Fed was pretty dovish. They were pretty like, we're not seeing enough, but we think we're getting towards the end of this hiking cycle, that we're finally getting that 5%, and then we'll wait and see. We like that it's coming down, but it's not coming down enough in the right areas. It's not coming down in service. It's not coming, the service sector. Housing, service, it's just not coming down in those areas. So they were sounding pretty nice about it, because they liked that goods inflation was coming down. But now we're seeing goods inflation coming back up. We're seeing fuel prices coming back up. So what are they going to say now? Now that they haven't had like 2 months of good CPI and PPI and PC data prints, what are they going to say now after we get a really bad one? That scares me. It should scare everyone. If you're holding anything long, you should be scared of that. And personally, I'm barely long. I'm mostly like 90% liquid here. But if that were to happen and the Fed starts to talk really scary, like, hey, we're starting to think 6% might be more appropriate, because it is clear now that inflation is way stickier than we thought. We thought we had it. We thought we had her. We thought we had it wrangled. We thought we had a rope around its neck, but it's gotten back out of control over the month of January. I hate to say it. So, man, that's not going to be good, man. The market is not going to be happy if they're going to have to come out and say, maybe we have to go to 6%, guys. The market is going to really shit its pants, because it has just been pricing in. They've been saying 5%, 5%, 5%. We'll sit there at 5%. We'll wait and see, and then maybe start cutting. But if they say 6%, you got to do the math. So we go to 6%. We're at like 4 3/4 now. If we want to go to 6, they do a 50 basis point hike this meeting in March, and then the next meeting they go 50, and then the meeting after that they go 25, or they even space it out. That really just extends this window of the hiking cycle of how long they're going to be hiking rates every meeting. That really just stretches this thing out another year. This stretches this out at least another year until they're pausing. So that is why the market just got really ahead of itself. It got way too ahead of itself, just being like, yep, everything's good. And I've said this before. This is what happens. These rallies, they just ignore what the Fed say. They they are just like assuming best case scenario is going to be what happens. And unfortunately, that's not looking like that's going to happen. Data says that's not going to happen. So now we got to look at the price action. So let's go do that. If we look at the Nasdaq 100, triple Qs here, we have broken our support. We have broken our demand that we had right here. Let's look at the futures, actually. I like the futures a little bit more. So actually, we're still in that demand zone on the Nasdaq futures. We have our 200-day moving average right here at 1195. We start to head back below those 200-day moving averages. Things are looking much, much more bearish. We are getting high volume selling today. So we have broken our support here at 1227. And now it's just a matter of, can we find any support at these previous levels? So we have 1189 right here. We can find some support there. That's a clear demand. And if we don't, then things are going to get rough. Things are going to get a little rough to the downside. It's going to be a bumpy ride. We have seen like 24% pullbacks off of these crazy rallies. And this is definitely one of the craziest rallies we've had. So if we were to see that 24% pullback from here, man, we're heading towards 10K on the Nasdaq futures, which would be about 240, I believe, on the triple Qs to about 230. So that's kind of where I'm aiming right now. I'm thinking, yeah, things are actually much worse than we fear. And now, if we look at the volatility fear index, not the fear index, volatility index, we are the highest volatility has been since January. The highest volatility has been this entire year. Breaking out of a perfect falling wedge on the volatility index on the VIX, did the exact same thing back here in June and August. I mean, this is where we topped back in August. Look at this. We gap up out of this box. Exact same thing we're doing right now. We gap up out of this demand zone. I mean, it's crazy. It's just picture perfect, honestly. But yeah, I would hope to find some support at these key levels that we have. The Nasdaq key level here at 293, then that 200-day moving average at 290. But we don't see any support at those levels, and we're heading down, down, down. We are heading straight for these point of control. The point of control we have is right here at 283, 284 basically. This is where, if you look, this is where the magnet has been. This is where we have been gravitated towards. Every time we get out of there, we pull back to it. Look at that. We get below it, pull back, get below it, pull back, get above it, pull down, above, pull down, yada, yada, yada. We're heading for that point of control at 284 if we don't find any support at 290. If PCE comes out red hot, inflation on the PCE is really high, that's the one that the Fed actually looks at. That's their favorite scale of inflation. They don't give a shit about CPI or PPI. They look at PCE. If that comes out red hot, then we're going to start seeing these bigger sell-offs. And it looks like the bull, yeah, there's, I mean, we haven't had one of these price action kind of days in a very long time, in months, where we just gap down and there's just nothing. It is just abysmal. We just melt down, just constant selling. The biggest bump we get, we bump from 294 up to like 295. We bump $1 here and there. Just abysmal. If you look at Apple. All right, full transparency. I've gotten an Apple put. I'm aiming for April Apple puts, and I go for April because I think we could get some choppiness. We could find some bounce. We could try to run up and test highs again. So I put some time on my contracts. Not financial advice, but I would say if you want to not get destroyed on some high volatility, then you put a little time on those contracts. But Apple, to me, looks perfect to the downside. We have broken this this trend line. And I was bullish on Apple over here because, hey, we're still above this trend line. Things are still looking good. We're still testing highs. But Apple recently has just dropped 1%. We've dropped 3/4. Now we're down 2.5%. Apple has completely fallen off. Apple does this all the time. Every rally, Apple does this. Look at this. Back in June and July, just goes straight up. And then, oh, no, we come down and then it tumbles. Back in March, just straight up. Apple just went straight up, and then it's a great short. So I love Apple to the downside. Apple is always a little choppy to the downside. So that's why I say you got to buy time on these contracts, because it can get these crazy green days out of nowhere, and you're like, oh, God, am I wrong? Am I wrong? And then it goes down eventually. So I love Apple to the downside. Look at NVIDIA. NVIDIA right now doesn't look perfect to the downside yet, because it looks like we're still holding this demand basically here at like 207. If we do break that and we break below 204, then NVIDIA looks immaculate to the downside, in my honest opinion. We do have earnings on NVIDIA on Wednesday, so those will be absolutely on Wednesday. That's tomorrow. Earnings on NVIDIA tomorrow. So I'm waiting to see what happens there. But if those are bad, man, Nvidia it's got some ways down, dude. We are far from the lows on Nvidia. I don't know if we'll see those lows again in like the 120s on Nvidia. I don't know. But all I know is that it has just gone straight up these past couple months. I mean, not even past couple months. Basically, just the 1 month over January. I mean, it went straight up. It went 62%. So, Nvidia to me to the downside looks very nice, in my opinion. Should we break those levels? I'm going to wait and see. I've got to wait and see because earnings on these semiconductors have just been completely ridiculous and crazy things happen. So I'm going to wait for earnings. If we get like a big gap up on earnings and we run straight to 230 and we bounce off 230, then god damn it, I'm going short there because then my risk to reward is like perfect. But that's what I'm seeing on Nvidia. And we just continue to sell off into the close. It's crazy. AMD looks great to the downside. Amazon. I mean, it's just... You're just seeing picture perfect things. You're just breaking supports. So now Amazon, yes, still looks good to the downside. Google looks great to the downside. Google, I mean, where is it going to find support? Look at this chart, man. It's in no man's land. It is searching for new lows. It's searching for support. Tesla. So Tesla, I'm not fully convinced. It's bounced off of 200, but Tesla is a little crazy. It had a hell of a yank down, but it also looks good to the downside. We're seeing some very high volume selling on Tesla today. Looking at BABA. Yeah, holy moly, BABA's down bad. If we just look, I mean, just looking at everything. And another thing worth noting is that all these things are starting to go back below these 200-day moving averages. Microsoft, we're going back below that 200-day moving average. Oh, not good. Not good. What does that tell you about the bulls? That we can only get above that 200-day moving average for like a month, and then we couldn't even stay above that for like 3 weeks. I mean, we got over there. We got over it for about 3 weeks, and now we're already losing it. Like, what does that tell you about the bulls? The bulls are just, they're jumping ship already. They're taking their profits. They're like, yep, this sucks. We're out. We out. So, I mean, come on. Hey. And now, things could change. Things could change. If we start to see some crazy green days, we start to push back above these highs, and yeah, of course I'm going bullish, but right now I'm not seeing it. Right now, I mean, Microsoft has just been going straight down. I mean, it's just terrible. So that's really all I got for y'all today. We're back to that. We're back to factual. The facts matter. The facts don't matter in these bull rallies. The facts didn't matter at all. Earnings are terrible. Doesn't matter. We're bullish. Fed still sounds kind of hawkish. Doesn't matter. We're bullish. We are going back to where, oh shit, we get a bad inflation read. That's right. We should probably go down. We're going back to that. Unfortunately, I hate to say it, but the trend is flipped in my honest opinion. So, thank you for watching. I only ask that you consider dropping a subscription, dropping a like, maybe drop a comment if you agree, if you disagree. I appreciate all comments. If you want to make fun of me and say, yeah, obviously you should have been bearish, yada yada, then hey, go for it. I would love to hear it. But anyways, guys, keep your heads up. Make sure you have very well managed, make sure you got that risk and reward down. What's the word I'm looking for? Well-defined risk and reward, because you don't want to get slapped around. If we do start to rip back up, you want to be able to cut those shorts, because if we do start to rip back up, the sky is the limit, man. The sky is the limit. So be very careful of that. But I will catch you guys on the next one. Peace.